In today's episode, I'm going to share with you 5 brutally honest truths about what it actually takes to become a consistently profitable trader. And I'm not going to sugarcoat it for you. I'm going to put it all on the table for you. And as I do this, you're going to better understand why most beginner traders end up losing money in the market. All of our natural instincts, our gut intuition as a beginner when it comes to the market is dead wrong. Consistently successful traders have learned to develop a system, a strategy, and a set of rules that they follow. And by doing all of this, they take emotion out of the equation. So brutally honest truth number 1 is that long-term success will never come from shooting from the hip or going with your gut of what you think is going to work. You may have some beginner's luck, and certainly during certain hot periods of the market, people have. But ultimately, over the long term, you don't make a career on luck. You need to have a system and a set of rules. But here's the challenge. As a beginner, how do you develop that? As a beginner trader, you have to find someone else out there that has a strategy that's similar to what you want to trade. And you've got to learn everything you can about it. So let me just give you an example. Let's say, for example, that you want to create a coffee shop. You want your own coffee shop. What's the best way to do it? The best way to do it isn't just to go and randomly open a coffee shop in a random location. The best way to do it would be to work in someone else's coffee shop, to learn everything you can about what makes their business successful. Or if their business is not successful, to understand all the reasons it's failing. Because then you take all of those lessons and you apply them to your business. You do the same thing with trading. Now, it's better to learn from a trader who's consistently profitable. If you learn from a trader who's losing money, I guess you learn all the things not to do, but that still leaves you kind of scratching your head with what you actually should do to make money. Now, I remember when I was getting started, there were some services out there that would tell you when a big investor had taken a position. Someone like Warren Buffett, or even politicians like Nancy Pelosi tell you when she's taken a position. And some people would try to just follow these big politicians. But I thought about it a little bit differently. I said, rather than trying to just blindly follow people, what if instead I try to understand their strategy? Now, the problem for me with trying to follow and learn about Warren Buffett is that he and I had, at the time when I was starting, and still today, completely different account sizes, completely different risk tolerance, and ultimately very different strategies that would be well suited for us. So as a retail trader, as a little fish in this big ocean of the market, you've got to find someone who's similar to you. Now that may be me, but it may be someone else out there. But as a beginner trader, you do not want to just shoot from the hip. You want to find someone who has a strategy as similar to yours as possible, or as similar to the way you want to trade as possible, and learn everything there is to learn about it. Here's brutally honest truth number 2. You have to be obsessed with numbers. You have to be obsessed with your data mining every trade that you take. So as a beginner, you're taking a lot of trades, learning a strategy that someone else is currently trading profitably. Maybe it's me, maybe it's someone else out there. Doesn't matter. You're taking a lot of trades. And so as you're taking all of those trades, you should be tracking certain metrics. So each day when I'm trading, I put a W and an L, winners and losers. And I just start tracking how many I've had of each. So I had 1 winner, 2 winners. All right, so I've got 100% accuracy. 3 winners, 100% accuracy. And then 1 loser. All of a sudden, my accuracy goes down to 75%. I have 2 more losers. My accuracy goes down to 50%. Now, trading is sort of a career. It is a career of numbers and certainly of statistics. And so what we know about 50% accuracy is that even with 50% accuracy, you could be profitable. You could be making money. You could be up $10,000. As long as, let's just say, your average losers are smaller than your average winners. And so now we need another data point. We need the profit to loss ratio. That's the relationship of your average winners to your average losers. And so in my own trading, I am obsessed with numbers. I take all of this data and I aggregate it using this software right here. Now, I don't have any affiliation with this software, TraderView. You could use this, you could use something else if you want to. But what you could do is you can import all of your trades from your broker, and they can be simulated trades. They don't have to be real money trades. But when you import these trades, you begin to dissect all of the data. And so this right here is over $19 million of trading records, trading data. And I can go through this and I can look at my accuracy, 68.5% accuracy. I can look at my average winners, $1,400, compared to my average losers, about $1,400. They're similar one-to-one. But I make money. Why? Because my accuracy is greater than 50%. Now you could look at the days and the times of the week that you make money. You could look at the price of stock that you make money on. Or if you're trading cryptocurrency or something else, you look at the price that you're making the most money on. And you better understand the relationships of where you can find profit in the market. So you've got to be obsessed with the numbers. There's this kind of thing with running a business. Ultimately, being a trader is running your own business. And you've got to know your numbers. You've got to know where you make money. You've got to know where you lose money. You got to know what to double down on, and you got to know what to leave for the you a few years from now who'll be better equipped to handle that kind of risk. Now you can understand, if you're just shooting from the hip, there's no way you're going to be getting into the metrics and getting into the numbers of your performance, right? So you can't shoot from the hip. So number one, you've got to make sure you're focusing on a strategy that other people are currently trading so you can take the emotion out. You're just following the rules. And then when you use your metrics, that helps reinforce following the rules, because the metrics will tell you, well, geez, I make the most money clearly on this price range. I make the most money at this time of day. And so all of these metrics support following your rules. So let's just say, for example, you had a period of time where your metrics were that you were losing money on this particular price range or this particular type of, this particular time of day, whatever the case may be. You would take that information, and without emotion, the analytics would simply tell you to adjust your strategy. And so every single day when you're trading, you can make these real-time adjustments. Oh, today's a day where I've got 100% accuracy. Or today's a day where I've got one winner and I've got 3 losers. I've got only 25% accuracy. So now in real time, I make adjustments to my strategy based on what my metrics are telling me. But I'll tell you, a lot of traders that I've known who have lost money, they don't do this. They don't think about the numbers. They don't even track their metrics. And to me, it's crazy because there's so much data at your disposal right here. So the awesome thing about learning how to trade, doesn't matter what strategy you're learning, is that you can practice. And while you're practicing, even if you're only trading with one share or you're trading in a simulator, pretend money, you can still track all of those trades, and you can still pull data from all of that trade, all those trading records, and you'll still be able to gain the same insights. Brutally honest truth number 3, you've got to have excellent emotional intelligence. Here's what I mean by this. Being a trader means being able to recognize emotions in the market. When you see the prices squeezing up very quickly, you know that other traders in the market are experiencing fear, emotion, greed. They want to get a piece of the action. They're jumping in. And so you've got to be able to recognize that you're going to have those same emotions, but you do not want to fall victim to them. So how do you walk that very fine line? You're trading every single day. There's emotion in the market, but you're not going to capitulate and give in to the emotion. You develop emotional intelligence. You develop an ability to recognize your own emotional state each day. You can feel your heart racing. You can feel your blood pressure picking up, and you recognize that I'm feeling frustrated. I'm feeling angry. And being able to label those emotions is really important, because you can feel angry, you can feel frustrated, and you can choose not to trade with that emotion. Or someone with less emotional intelligence feels angry, feels frustrated, is about to slam their fists, and they keep trading. And they're pressing the buttons harder and harder. They're getting more and more angry. And listen, I'm not casting any judgment. I've been there in my own trading career. I had times early on when I was ready to flip the desk. In fact, I had times where I did throw things right off my desk because I was so angry. And I didn't recognize that right there was a huge red flag to stop trading. I would continue to trade in spite of those huge emotions. So for me, one of the biggest lessons was learning that I have certain triggers, and that once I start getting emotionally activated, it's a lot harder for me to have the discipline to follow the rules of the strategy. So right, when we go back to honest truth number 1, it's not about shooting from the hip, it's about having a strategy. Honest truth number 2, you've got to be obsessed with the numbers and the data. Honest truth number 3, You've got to have that emotional intelligence. And here's the thing, when you gain that confidence from knowing you've got a strategy that works, as long as you keep the emotions out, all of the data backs that up, it becomes a lot easier for you to accept loss. Brutally honest truth number 4. The best traders become great at losing. And I know losing's not fun. It doesn't feel good initially to have losses. But the better you get at losing, the better you will become at trading. Because here's the reality. Trading is risky, and you don't make money without taking risk. Taking risk means you have the potential to lose. If you're truly okay with that potential to lose, then you're free from the emotion. You no longer feel terrible when you lose, because you know that out of 100 trades I take, I'm going to lose on 30 of them. Doesn't matter. So what? You take the loss. That's part of the strategy. Part of a winning strategy is losing 30% of the time, and it's okay to lose. Now, I've had traders that I've worked with, students at Warrior Trading, who came from different careers. I had one student who came from a career as a pharmacist, and he wanted to learn how to trade. And he said, Ross, man, I just cannot get past the fact that I spent my whole life in a career where you cannot make a single mistake. And now you're telling me it's okay to be wrong 30% of the time? And I know that that's kind of wild, but yes, it is. And you have to embrace it. You have to just take those losses in stride. And so I've had in my career certainly huge losses. Some of them are bigger than others. But in reality, there's only one day of my career that was ever my worst day. And there's only one day that was ever my best day. And everything else is just in between. And so really, there's no point in getting emotional over a loss when part of your strategy requires you to lose 20, 30% of the time. Yeah, there may be some traders out there that will have a 90% success rate. Typically, those traders will have really big losses on the small percentage of the time that they lose. So it's kind of a choice. Do you want to be a trader with really high accuracy, but periodically huge losses? Or do you want lower accuracy, slightly lower accuracy, but your losses are a little bit more manageable? So in other words, you take losses quickly when they're still small, but you have a lot of them. It doesn't really matter to me to have a lot of small losses, as long as when you have your winners, they end up being nice. So that all goes back to the data. That all goes back to the strategy that you're trading. So you've got to be really good at cutting your losses. So one of the things that I would do if I were a beginner trader is I would just create a hotkey right on my keyboard to bail out. Just press that button and get used to pressing it. And here's the way you condition yourself to the loss, to it not being a big deal. You start trading with smaller size. So brutally honest truth number 5. You cannot start by going big. You've got to pay your dues. I know it's frustrating, especially when the market's hot. You want to jump in there, you want to take big size, you want to make big money, but you've got to pay your dues first. The right way to learn is to condition yourself first by trading in a simulator to prove that you can manage to produce good metrics, that you can be profitable, trading the strategy that works for other people. So let's say, for instance, you're trading my strategy. My strategy works great for me. It doesn't guarantee it's going to work well for you. So your first phase is simply trading this strategy that you're learning and proving whether or not you can trade it successfully. If you can follow the rules, if you can trade it successfully, if your data supports you trading it with real money, then you start trading live, but you start with small size. It could be 1 share, 10 shares, 100 shares, and each week that you have profit, and again, it's not about a lot of profit, it's just about being consistent, you increase your size. And you continue to gradually increase size from what at one time was 10 shares all the way up to 1,000 to 5,000 to 10,000. And as you slowly increase your size, you're conditioning yourself to be comfortable with taking loss. So right now for me, I could take a $50,000 loss and brush it off my shoulder. Now, that's not where I was when I started. I had to work all the way up to this level. It took years and years to get here. But you know what? There's other people a little further down the road than me who could take a $500,000 loss and brush it off their shoulder. I'm not there yet. So we're all somewhere on this spectrum of risk tolerance and experience. But here's something that you can get excited about. So as a beginner trader, your intuition, your gut reaction of what you should do in the market is dead wrong. But as you gain more experience, you're going to begin to develop a sense of educated intuition, where you're going to actually be able, with a certain degree of accuracy, to predict what's going to happen next. You're going to get so good at understanding the relationship of these certain patterns, these signals in the market. You're going to look at these charts and you're going to see plain as day these signals. Now, it takes time to train your eye to spot them. But once you start to see them, we had this big move today on VLCN, right? This was an incredible move. Once you get trained to see these in real time, you know exactly what's going to happen. And so there's this sort of process of receiving dividends from all the experience that you've gained. And that's the importance of paying your dues. You pay your dues, you gain your experience, and you know that the you a year from now will be better equipped to trade with big size than the you of today. And so, yeah, the best time to have started to learn to trade was 10 years ago. So today you have 10 years of experience under your belt. The next best time to learn is right now. So you can begin gaining experience and begin gaining your own sense of educated intuition. So for those guys tuning in for this episode who want to keep learning about trading, I'm going to put links to a couple of my free long form episodes right here and right here that you guys have got to check out. I think you're going to really enjoy them. And I hope this gets you off to a really good start in your trading journey.